It's simple. Warren Buffett says it clearly in his book. It's buy low, sell high. So I'm buying low and selling high. It's really simple for me. Warren Buffett knows what he's talking about.
Don't you mean Warren Buffett?
All right, what's up, guys? Welcome to the fourth episode of the Richuation Room. Today's guest is Kyle, the passive income investor. Kyle is obviously, from the name, an investor, a YouTube creator, and more. I've had the pleasure of being a part of his investing Facebook group and have been following his YouTube channel now for a few months. And it's just been very educational, and I've really enjoyed the energy that he brings to all his videos as well. It's about 9 a.m. where I am and where I'm recording this, and I really did seriously think about skipping the coffee just because I thought you'd bring that energy that we needed. So no pressure, but I got the coffee anyway on standby just in case I need that backup. So thanks for coming on today, man.
Yeah, thanks for having me on. I really appreciate the shout out. It's going to be interesting to try and experiment with the podcast side of things as well. And I know we were kicking off talking about our stocks already, but I don't know if you have something you want to drill me on right off the hop here. Or do you want me to just introduce myself? Because I'm not too sure how our audience might interconnect. I know the finance community is fairly interconnected, but yeah, I've been managing about a six-figure portfolio after about 5 years, building up. I didn't get to ask you either. How long have you been on this journey for?
The investing journey?
Yeah.
I'd say when I really got serious was probably about a year and a half ago is when I kind of stopped playing games and I stopped, doing day trading and swing trading and that kind of stuff. So I don't know. It kind of depends on when you ask, because I luckily had a lot of good coaching from parents and from teachers and that kind of stuff early on. So, as soon as I had a stable income, I had money going into a Roth IRA and maxing that out every year, but I really didn't even know what I was doing there. It was just what I was told was the right thing to do, and I was a pretty avid saver as well. But I didn't really get into trying to get my money actually working for me and really managing it until probably a year and a half ago.
Okay, so you're actually still pretty fresh to the whole game then, but I went down the exact same path you did with day trading and trying some stuff out. And I was joking about this yesterday Friday, because there's so many people super excited about getting all these capital gains so quick to the market, because there's a lot of new people that jumped in kind of confused by what they were doing, but they bought the dips, did it insanely well. And I mean, it's grateful to have that in the beginning, but as unlikely as it might be going forward, at the same time, I'm like, when I started investing, my portfolio dropped 50% in the first year, and I didn't start making any profit for the first year and 6 months. So, I mean, I stuck it out a lot longer than most people probably would after not finding a lot of success in the beginning. But again, you kind of got to learn your way into this, because when I was getting into it, I think there was a lot less on YouTube, and the people that were on YouTube or anybody you could really talk to was only the big guys. I remember I used to call into a BNN to talk to Kevin O'Leary. Like, I would do whatever I could just to get just because those were the influencers back then. I mean, you were either big or you were nobody, and if you were nobody, like, you wouldn't find you on YouTube. I think you probably know, like, Financial Education, like Graham Stephan. Like, if you go back 5 years and look at their YouTube channels, I mean, you weren't exactly just stumble upon them, right? So I got pretty lucky because I ended up picking up a high risk stock back in the day, because I didn't have a lot of money and I had a hard time trying to figure out what path I was going to go down. And with the little money I had, I kind of just focused on finding niches that I enjoyed. And the two niches that I ended up tackling, because the MJ sector wasn't legal yet in Canada, and Canopy Growth Corp was just coming up. That was one of the first stocks I ever bought, along with a natural energy company called Northland Power. And I always kind of joke, because I'm like, man, if I just stuck with those two companies, like, if I stopped diversifying and I just threw all my money in those two companies, like, I would have just been slaughtering. But Canopy worked out real well, obviously, and I ended up liquidating a little bit earlier on, because I think I sold out of that when it was in the 20 range after buying it from the 3s to the 8s. But that was a first home run, and that was just luck. I mean, I caught a hype train, and that's all it was. Fundamentals sucked, sold out. Stock ended up just tanking, right? Hopefully it becomes another turnaround story. With Northland Power, I made a video on this a week or two ago talking about the best monthly paying stock. And I kind of voiced a challenge to my subscribers that I want you to find me a monthly paying dividend stock that's green on the year and is profitable. and it doesn't seem to exist except for this one utility that I own. You guys can look up the ticker. It's NPI, and I'm not saying go and buy it. I think the valuation is starting to get up there, but at the same time, I mean, the performance on it over the last 5 years has been absurd, and I think it's up 20 or 30% on the year right now,
Wow.
from year to date. So it's up there performing with ARC, which is pretty surprising, considering I wouldn't really consider it. Well, I guess it's a good growth company because I mean they do have an insane amount of projects in the natural energy space. But moving forward from that, if you want to talk about kind of the evolution aspect of the portfolio and how I've kind of changed, I mean I didn't become a heavy dividend focused investor until I'm going to say about 2 years ago. Because for the first few years of my investing career, I was paranoid as all hell. I mean, I was the guy that was stacking gold up. I used to have 30K in gold buried in the basement. Because I mean, when you first get in the market, usually you start hearing about the 2008 financial crisis, and you watch the market keep going up. And I mean, everyone made me terrified of it. So it took me a long time to understand the value of cash flow, because I think too many people get caught up in the speculative aspects of things, and I just stopped caring about gold because I want to get to a point of financial freedom in my life. I don't want to have to worry about, if someone's going to steal this stuff in the basement, and then you have to deal with trading it, selling it, the commissions that get involved. It's a headache and a half, when you can just buy a solid cash flowing asset. Like if I was going to buy hard assets today, it'd have to be real estate, because I try not to waste my time on things that don't cash flow as much. Now I do have my spec plays, for my growth. And I think my growth stocks make up about 35% of my portfolio right now, and the rest are just dividend plays. But even so, I've got Apple and Microsoft. I consider them growth, and they're the only ones that'll pay me dividends. And then me and you were discussing as well, like Tesla, Facebook. I also own MindMed, which is a psychedelic company. But they make up a smaller chunk of the portfolio. And I was talking to you as well. Like I got into Tesla earlier on. So I got lucky. I doubled my money there. But I mean, I went through hell. I wasn't one of the people that caught the 170 dip. I was the guy that was buying it in the 300s prior to watch it go down to 170 and get ridiculed insanely, because that's when Tesla was just going through the media garbage can, and I just couldn't get. I was getting a lot of flack, ton of flack, but I held on, and then it came back to the 300s. It looked like it was going to explode. So when it started coming back, I loaded the boat pretty heavy, and then obviously we all know how that story went. But I don't know. I can keep going on about some growth plays if you want, but the dividend strategy and the cash flow, I think, is what matters most at the end of the day. And I was talking a little earlier about this, whether you should just go growth or whether you should just go dividends as well. And I think it's important to have a bit of a mix, because if you can mix your portfolio up a little bit in times like this, it's nice having that cash flow, because it allows you to still invest if you lost your income like I did. Because I mean, my job just imploded. I got no work probably going until 2021, and the work I do have, I'm just scraping up. So I was telling people, like, this is why you kind of diversify. You get your growth stocks to keep your portfolio up with the S&P, because typically a lot of the dividend stocks I've been buying have been lackluster at best, like the financials. Real estate's been a bit lackluster here. But at the end of the day, the growth is what's going to hold the portfolio up. But you don't want to be in a situation where you're like me, you lose your job, you only have growth stocks, and now you need to find income. So you're going to sell off your growth stocks. I don't want to be in that position. So I found that, building my portfolio up in a manner where it's cash flowing about 500 a month in dividends, I mean, that's a pretty nice cushion to tap into need be. And in this situation, I don't need to tap into the dividends just yet, because like I said, I'm still pretty scrappy. I'm still making money off the YouTube channel. So it's nice to be able to just reinvest those dividends. And then even if I have some extra capital, I mean, that starts really adding up. And I don't want to state, I know 500 a month in dividends, to some people might sound like a lot. And I've been doing this for 5 years. My portfolio is worth about 152,000 today. But I want people to keep in mind, I'm not rich. I mean, I live at home with my parents. I'm just frugal, and I built this portfolio making less than 40,000 a year. So I like reminding people of that this is a real possibility if you can just be frugal and, save your money and, just keep being diligent. I don't know if you want to segue into something before I go on another too long of a rant here, but I don't know if you want to deep dive into any little of those comments I had
Well,
there. But
I have 2 points that I think are interesting that you brought up. So you mentioned that when you first started investing, and the market, whether it was the market or just your investments, regardless, took a hit, and you said you were kind of in the weeds for a year and a half before you really saw anything start to become green. Versus some people who, in this past downturn, probably took advantage of it, and they probably heard the things on, from relatives or whoever it is saying, "Hey, this is the best time to invest." They get into it, and all they see is themselves making money. I would argue And kind of similar to myself because, I started investing about a year ago. So it's been up, up, up all the way, pretty much nice and steady. Some small dips here and there, but within the first year and a half of when I started is when probably the most significant downturn we've had since 2008 really occurred. My argument would be that for the long term, having gone through what you went through when you first started investing and experience a true downturn from potentially buying at all-time highs is going to build a better foundation for long-term investing, I think, because it shows, hey, I didn't sell at the bottom. I continued to invest. I continued to believe in kind of what I had learned, and now obviously we're seeing a lot of that pay off. Who knows where the market's going to go from here, but it at least shows that nice consistent basis of what we had been talking about and what we had been planning for is actually working. So I think in a weird way, it's almost nice to have those things happen to you because it proves the point that you've been trying to drive home, at least to yourself, that I'm not going to sell during this downturn and it's all going to end up where I want it in the long term.
Yeah, I think it might be a little more fresh for you in that aspect. For me, I mean, I've been planning for this since I've been buying gold. The only reason I was buying gold was waiting for a downturn. But I realized as well, gold might not be the best performer in that aspect. But we're talking about like the cost average game. And in our kind of community, we all kind of cost average in looking for financial freedom over a long-term period of time. And in that investment kind of philosophy, I mean, I get excited on downturns. I like I was saying on our stream last night that this is the fastest my dividends have ever grown. I think I've grown my dividends annually by $1,000 already in the first 6 months. So I mean, if that could be projected forward, and you can grow your dividend by 2,000, I mean, a year annually at the end of, in a decade, you're going to be making 20K plus. But that's not going to continue. I mean, that's what people keep forgetting when the markets crash. So I'm one of those people that gets a lot less excited when the markets go up because it's fun to brag and be like, oh, look at all these capital gains. But at the end of the day, I mean, I'm not itching to buy into this market. This market's not going to fast track my retirement. So, I mean, it's trying to rewire your programming if this is the strategy you're trying to achieve, because too many people get caught up in the media and everything else. And like you're saying, right? Like I know people that took on the risk and bought Carnival Cruise at like $8 a share. Not my cup of tea, but they're doing exceptionally well. And I think sometimes you have to butt heads with the media because you'll never make money if everybody is on your side for a company. It's just not how it works. As Tesla's a good example, when it went down to that 170 and all that heat was going on, I mean, that was max pain. And that's where the truth started kind of falling away from what the company was actually going to achieve. And then it kind of over exploded to the other side. But in the long-term aspect of things, yeah, cost averaging is the only way to do it and getting your head out of the gutter. I know there's a big YouTuber in the dividend community by the name of PPC Ian, and he, I just think it's funny because he tries to block out all the news and he buys Starbucks every Monday. It's how he starts his Mondays. Doesn't care what the price is, just buy Starbucks. And in these markets, I'm still cost averaging in with dividends, but because I'm still waiting, and with all the market news going on and the fact that I built up a decent portfolio, I can ride the gains from here. Somebody that's new to investing, and this is the hard debate because people say, oh, well, you wouldn't buy Facebook up here. And I'm like, well, actually I would. And I have. Like, I mean, I buy for my family, my friends. I was buying my girlfriend Facebook in the 150s when it dropped. She crushed it. And then I bought her more because she's still cost averaging in when it hit 230. I think we got in at 227 or something. And people think that's nuts. But at the end of the day, it's like, yeah, but she doesn't have a huge portfolio yet. She's building it. So in her perspective of things, like she needs to cost average in. And if, yeah, sure, she's might be overpaying in the macro, but I mean, at least she's cost averaging at a level where her cost average right now is 175 in Facebook. And yeah, it's hard to bite that bullet. But if you're somebody like me that has a scaled portfolio already, I mean, I wouldn't worry about throwing huge amounts of money in the market right now. I mean, you can just do what I'm doing, reinvest the dividends, build up cash, and wait for the next dip. But if you're new to investing, like I wouldn't advise you from not buying into the market where it sits today, because yeah, it could drop, but you have zero exposure, and you don't know what happens tomorrow. And I don't want to make a gamble on what might happen. So if the markets don't crash or don't have a second wind to the downside, I mean, it's nice to know I already have my positions fairly built out. So I'm still going to capitalize if it doesn't go down. But a lot of people don't realize that they're not going to have that opportunity because they don't have the exposure. Because I don't try and predict what the market's going to do. I mean, I might try and position myself in case it does something, but at the end of the day, I'm not going to bet like the whole farm on it. I'm not going to sit here on my hands and not do anything because I think it's going to crash. Like too many people get caught up in the media, and right now I think is a good definer of how good of an investor you're going to be with all this terrible news. And again, there's always deals. If you're looking, I think there's a big difference. And I want to ask you this as well. Are you an ETF investor? I think you go down the path of individual stocks as well, right? Which comes at its own risk. So at that game, it's a lot different, right? I mean, if you're buying ETFs, there's no concern. You're not playing the let's read the balance sheets, because it's a stressful time. You For somebody like me, I mean, for my companies that don't perform well, I kind of get my back up and a chip on my shoulder to make sure they're going to survive this. So I mean, you really have to start doing your due diligence, because at the end of the day, I don't mind doing what Buffett did and take a loss on the airlines. If it's not going to fit my long-term perspective. And I've been doing that with a lot of stocks, and I haven't sold any yet. But I have a few stocks in my portfolio that I question a lot. And one of the most interesting ones, I think, is the GEO Group, that prison company. Unbelievable balance sheet. I mean, if you take the balance sheet and the performance on the earnings and their revenues over the last 5 years, and then just put it right next to the chart, it makes no sense. I mean, it has the most stable income of almost any REIT I've ever seen. Like, it slowly grows over time, incredible revenue, incredible stability in just the overall earnings. But the stock chart is so politically controlled. It's a roller coaster and a half. But I'm not going to get too down that path of spec plays, because I don't want to start taking people into the dark world, some of the morally debated stocks. But I don't know if you have any other questions, if you want to go down some different paths.
Yeah, a lot. It's funny when people talk about this stock. I'm not even speaking to that one specifically because I don't know it too in depth. But it's funny when people will talk about how do you balance the morality of this stock versus how it's performing. It's kind of like a philosophical question maybe. But I think when you're talking about hey, should I buy this stock here? Should I buy this stock here? And dollar cost averaging, the thing that I constantly battle with is, okay, do I want to buy Johnson and Johnson at near all-time highs again? Right? Is that something I want to do? And what I've actually seen happen, because I have been slowly feeding money in, like I said, since about a year ago, into a good core group of stocks. As the market has gone up and up and up, well, hey, huge downturn. What are the stocks that are affected the most? Probably, in my case, the ones that I don't want to have the biggest positions in my portfolio. So the ones that I really want to be kind of holding up the portfolio are the Apples, the Microsofts, J&J. Coca-Cola got hit pretty good. But some of these stocks that didn't take the big hit are the ones that I want more capital in. And so now it's kind of like this balance of, okay, do I still go for the good deals like the Realty Income Core, or
Yeah.
the Raytheon technology is one that I just started as well. These still are down, 30+%. Great deals, but I don't want my Raytheon to be the same percentage of my portfolio that Johnson and Johnson is. Like, that's just
Yeah,
not
for
where I
sure.
want that capital allocation to go. So it's kind of playing that balance of where do I put the money, and also should I just say screw it and just I'm going to add this much to Johnson and Johnson no matter what the price is to get it kind of where I want it to be. Do you have any thoughts on where you're kind of allocating that money based off of who's taking the hit and who hasn't?
Yeah, it's again that balancing act, right? For me, I'm in the same boat, because I've kind of dedicated this year to focus on REITs, and I've been cost averaging into some of my favorite REITs before the crash, and then when the crash happened, I just fell in love. Because I mean, if you understand how some REITs are going to get through this, you got to be careful, because there's a lot of speculation around office and retail REITs, and if people are going to start working from home more than they are the office. But there's REITs that have some really stable clients, have a really good growth vector going into the future when they're building, say, condos or rental units. So, I mean, I fell in love, because there's no real deals in the real estate market yet. Real estate hasn't taken a huge dip, but with real estate investment trusts, because they're publicly traded, sometimes the market can devalue that real estate at a level that's unbelievable compared to the actual underlying hard assets. So I've been loading the boat as well on that, but I have the same issue too, is I want my portfolio to be balanced in a way where it's going to have some stability, and you want those stability players that you get from Apple, from Johnson and Johnson. And I'm actually probably in the next few months, I will be as well scaling my J&J position to try and get my healthcare exposure up, because it's one of my weakest exposures in my portfolio. And it's a stabilizer. Like, you want to have those stocks that are going to keep your portfolio at a base. Because I mean, I remember the one time I had way too much money in Apple, and I kind of regret it at this point. But I just remember when Apple went through that major dip, and I think it was during the tariff war. I think it was the beginning of 2018. And just watching Apple dip the way it did, and the amount of money I had in it terrified me. because I mean, when you overexpose yourself to one stock, depending on your comfort levels, and for me, I think I had 25 or something thousand in it at the time, and when it dipped by like 30 or 40%. And I mean, when you watch that money just expunge out of your portfolio, and you watch your performance drop insanely, like you start understanding why you want the diversification. Because at the end of the day, it's a lot more comforting to wake up and look at your portfolio doing maybe like $5,000-$10,000 mood swings on a day-to-day basis at my scale than it is to say have half of your portfolio in one stock and then watch it drop, that 30%. And then if you have 100K in it, you're doing $30,000 mood swings, which gets utterly terrifying. But I guess that's the risk tolerance level and your comfort with that. And the more, if you're comfortable with the risk of that fluctuations, I mean, all the power to you. But at the end of the day, I'm not. So I love my exposure to my utilities, my healthcare. I think those are like the strongest part of my portfolio, and I plan on strengthening them over time as well. But yeah, J&J, great company. I don't care what I pay for it, if I'm being honest, because it's something that I'll probably keep buying here and there periodically as I scale the portfolio. So I mean, I got lucky. I picked it up, I think, in the 136 range before it kind of popped. But if it dips again too, I'll always keep an eye on it. If you can pick it up on a dip, great. If I just want to buy it for the sake of buying it to add some stability. Are there any sectors of the market that you're like highly focused on for like spec plays? I know you're saying you're kind of getting the Raytheon side of things. I don't play too much on the chip makers or the 5G guys right now, but are you kind of gearing into any good growth vectors right now?
Not really. I think you mentioned ARK Invest previously, right?
Yeah.
Yeah. So I kind of follow them pretty closely because I think they're pretty smart. I really love anytime Kathy Wood is interviewed, I listen because I think she is very forward thinking compared to a lot of the people that are speaking. And I also think she like holds her conviction no matter what. They were made fun of vastly when they said Tesla 22,000 price target,
Yeah.
which maybe that is a little bit aggressive, but I do appreciate the fact that they believe in themselves and they really are not going to let anybody kind of push them around. So I wouldn't say I have any crazy speculative plays. I do want to basically from kind of watching you, and I know Matt Money got his hand in it as well, but I don't know anything about MindMed. I watched your video on it a few weeks ago, I guess it was. Um, but things like that, I'd like to kind of throw a couple $100 in here or there, just to kind of maybe have that lottery ticket. But no spec plays. Really, my growth type portfolio, I guess, is about 20% of my overall allocation, and current holdings in that, if you are really just Tesla, Square, Facebook, and I think that's it right now. I previously had Uber, but once it was in the green, I sold out of it just because I kind of felt like if Tesla's going on the trajectory that I think it is, there's a good chance that they kind of take over some of the share of ride sharing. So I didn't really want to have my hand in both pots there, and I wanted to reallocate that money somewhere else. So no real spec plays, but I do kind of for the same reason you talked about, really enjoy having those stocks because when this market was going down on that recovery, like, Tesla and Square are literally putting the team on their back and dragging this portfolio back into the green. And then the value stocks and the dividend growth stocks start to slowly follow after that. But it definitely kind of stabilized my portfolio, and a lot of that can probably just be attributed to Tesla. But it's kind of nice to have that exposure in both areas.
Yeah, for sure. I just want to preface too, because we were joking about this a lot, that we always talk about the most hyped stocks, but realistically, we don't talk about the 90% of our portfolio. We only ever talk about the 10% or the 1% of risk plays that we own. And like my risk plays, I mean, Tesla is one of my bigger scaled risk plays. But at the end of the day, I mean, I feel like they've built the moat. They've gone over the hurdles to get to where they are, and I don't think they're not going to be doing. It's still going to be volatile, but I can't see it going back down, into the 100 range and then coming back up to 900s. I think they've built a moat now, and they're going to be a little bit more stable going forward, so I can trust them better. But with a company like MindMed, I mean, if you're talking about the risk spectrum of stocks, that's probably the riskiest I'm going to own, and I think it makes up 0.05% or less of my portfolio at this point. I think it's literally like 0.043%, just because those are the lottery ticket stocks, right? I mean, at the end of the day, you don't need to have a lot of money in them. And I know people throw in 100,000+ at MindMed, which blows my mind because that risk would scare the hell out of me. But those are the kind of companies that they either go to the moon or they go straight to zero. And I know people that are buying them, based off the video that I made, and they're like, oh, well, it's down. It's not performing well. And I'm like, you're not buying this for stock movement. I mean, it literally is either going to be worthless or it's not. So why do you care if it's going up 10-20% on a buy daily basis? I mean, at the end of the day, they're going to get the news that FDA is going to be approving their drugs, or the FDA won't be approving the drugs. And that's the catalyst. And if they don't do it, the company's going to, every shareholder's dumping out at that point. So, I mean, I don't know why people are so over concerned about these penny stocks and what they're doing unless you're day trading them. But for those of people that don't know about MindMed, essentially it's the reason that MindMed and Tesla kind of sit in the same kind of basket of stocks for me is they're trying to solve trillion-dollar problems. And it's really interesting if you can recognize companies that are doing this, especially early on, because people keep forgetting that I'm going to compare this to Nikola and Tesla because I've been getting in a big argument between these two companies. And Nikola, people are saying, oh, it is going to be a big competitor to Tesla. But the reason it won't is because they're trying to partner and they want to, they can't do manufacturing like Tesla has. They can't build factories. So they make the technology and license it, and they kind of become a royalty company. And in that motion of doing that, they wipe out any kind of massive capital gains they're ever going to experience, because every time they make a new technology, they dilute their income because they have to partner with people, and that comes with a ton of risk as well, because then you're relying on other manufacturers. How long are those contracts for? It becomes a whole convoluted mess. But with Tesla, they're actually trying to solve trillion-dollar problems. Self-driving. I mean, we were talking about the peaker plants last night and how Tesla wants to use their cars to plug into the entire grid and use it to help, actually feed power to homes. I mean, on the aspect of things like that, those are trillion-dollar problems. And like Kathy Wood says, like if they can achieve even half of what they're trying to do, I mean, there's no reason that the stock can't be worth, 12,000 a share. And people think that's an absurd statement, and it is. I mean, they have to achieve a lot of complicated things first. But I mean, if you can capture that early on and you understand that they have, so long as they can prove that they can actually execute their plans, which Tesla's starting to prove, I mean, you're heading in the right direction if you want to make real capital gains. But if you're trying to make a quick swing trade and just make something quick, I mean, you can buy something like a Nikola for the short term, but in the long run, you're never going to see the upside potential that you're going to see out of something like an Apple, or like a Tesla, sorry, or like a MindMed. Because with MindMed, I mean, the problems they're trying to tackle haven't been touched in 50 years. We're talking about depression, opioid addiction, anxiety, ADD, and those are multi-trillion-dollar problems and drugs that haven't been fixed in years. So they're claiming they can do all of it with no side effects, no physical problems. And the drugs they're using, they're saying, are safer than over-the-counter Tylenol, which is pretty staggering for psychedelics, right? So I mean, they have that potential to be a trillion-dollar company, but unfortunately, unlike Tesla, MindMed hasn't proven any execution yet.
Right.
So I mean, they're super early on. So for a company like that, like I'm only going to allocate a super tiny amount just to be in the early days. If it works out, then I'll start loading the boat like I did with Tesla, right? But even my early days of Tesla, I mean, I think I only threw a few thousand at it back in the first, when it hit 300 back before it did its first crash. And then I waited because I'm like, I'm not just going to keep allocating money to something I'm not exactly sure is going to work until they can prove some execution. And they did. So I gave them more money. Sorry, excuse me. But yeah, with those companies, man, like I said, it's fun how much we talk about them, but I think there's a lot of newbies to the market, and the first thing they do is they go and buy like 5 or 10 stocks in their M1 Finance account, and the first 2 or 3 stocks they buy are Tesla or MindMed, and it's like 10 or 20% of their portfolio, and I kind of cringe a little inside. It hurts me. I'm just like, be aware, even though it's the 1% of the stocks we talk about, it has nothing to do with like 99% of the portfolio, right? How I know you mentioned in the beginning, how scaled, how much money are you actually allocating to your portfolio on your savings rate? Because I mean, we could segue a little bit. We don't have to go. We talk about a lot of the stocks, and I'm sure everybody can hear about Nikola and all these companies as much as they want. But I'd be interested to hear more about your path to financial freedom and kind of how you're approaching it with your savings rate, and what are you doing for full-time work right now, and how is that affected by the current market conditions? I'd love to hear that, and then maybe I'll chime in a little bit as well.
Yeah. So honestly, I try not to get too personal in terms of my background and that kind of stuff. But I'll kind of keep it general. I'm in the United States military, so I'm in the Air Force right now. I'm an officer in the Air Force.
Oh, nice.
So the good news is that has not been affected really by any of the market conditions or the economy or anything like that. So my path to financial freedom really, and this is something I talked about, or I guess I just threw out on Twitter a few days ago, was kind of a new metric that I've started um, keeping track of for myself is how much money I was able to either save or invest that month. And I think if I can keep track of that every month from here on out and kind of show trends, obviously different expenses are going to pop up all the time, so you can't control that. But if it shows that I'm trending in the correct direction, then it'll at least allow me to see how I'm progressing towards my goals, right? So I was saying one of the
So,
go ahead.
do you have a time frame for your financial independence? Are you looking a decade, 15, 20 years out? What is your fire date?
Yeah, I don't honestly. I appreciate and I like the fire movement of being able to retire early. I have no intention of really retiring early. I enjoy what I do right now, and I have aspirations in the business world and that kind of stuff once my commitment is up. So I have no intention really of retiring early, but I do love the idea of having the option to be like, you know what,
Yeah.
if I get out or I lose my job, whatever the case is, I can live comfortably for X amount of time or really indefinitely off of dividends if we're at that level and take some time off or spend time with family, whatever the case is, before I kind of move on and make my next step in life. So I'm not super gung ho into the fire movement, just because I the idea of retiring early to me right now doesn't really sound as appealing maybe than it does to others. But it's more so having the freedom just to kind of not have to worry about work, I guess, if that makes sense. Um,
Yeah,
so
no, for sure.
in order to get there, and this is probably like the most simplistic way of doing it, but there's an app that is just a compound calculator, like any compound
Yeah.
calculator. And one of my favorite things to do is, throw in an assumed 7 or 8% interest rate. So that's going to be below the average, right? But I am investing in individual stocks. So it could be above that, could be below that. And then fragging out basically what I do is 7 years from now. So that's when my service commitment is up. And then my two goals are 7 years from now. So when my commitment's up, and then 13 years from now, that's when I would be 40 years old, kind of how much money I would need to invest to be able to hit certain milestones at each of those. So 7 years from now, if I'm able to continue on the track of investing roughly $1,000 a month or saving $1,000 a month, with that interest rate, I should be somewhere around $500,000. And then at the age of 40, I should be somewhere around $1 million. And obviously, who knows what's going to happen between now and then? I'm sure if there's kids in the mix, that'll throw things way off. Who knows what's going to happen
So,
in the market?
are you married or you got family
Yeah, I
or
am married, but no kids or anything like that. So
do you? I gotta ask, do you find that tough in the especially in the Army with the airline stuff? Because I've worked on a few of the airline bases here, not in the aspect of joining the Army. I've done events for people in that space, and I just remember some guys joking to me about how hard it is to be in a relationship because sometimes you get called and you could be called to be gone for 2 to 3 months. So does that put a bit of a strain on your relationship?
I'm Air Force, which it's not really that much different in terms of being called to be able to go do different things at different times. But the current position that I'm in now is very stable. It's basically an instructor role, so we
Oh,
don't even
nice.
have the ability really to deploy with what I'm doing right now. So that's really all we've known right now. So in a few years, I should move on and go do something else where that's definitely a very real possibility, but I have not had to really cross that bridge yet.
So you're in a real sweet spot, man. You're crushing it, putting K away a month, still have a nice stable job to show up to, and it seems like you got a good wife at home there. I mean, you're living the dream pretty much already.
Dude, I'm
I,
very
I mean,
fortunate.
my life's a mess.
No, I'm very fortunate. There's pluses and minuses to everything. They're
Yeah.
long days, and that's kind of like we're going on a side tangent here, but I really enjoy watching guys like you and other guys on YouTube who can put out a fair amount of content. And then between you and Matt, doing your things with the live streams and the products that you've created, that's all stuff that I think is awesome. And I was basically like, I want to get involved in some way, right? But I mean, whether you call it excuses or not, I didn't really have the time Monday through Friday to put in
Yeah.
the energy. By the time I work about 12 hours a day and then go to the gym and come home, it's like, how much time do you really have? So I kind of told myself if I can, put out roughly one podcast or something every week and a half and at least get my foot in the door and get started, then maybe it's something I can build and grow on. And I'm also very grateful for the fact that I've noticed, maybe it's just the financial community. I'm not sure. Maybe it's YouTube in general, but everyone in the financial community, for the most part, is super receptive to be kind of helping others and going along the journey together. So it's been great reaching out to people, and people just want to, converse and learn. And like I said, if I get
Yeah.
0 views on this or 0 listens, and I never, there's never any money made, I think spending an hour on the weekend talking to somebody who's like-minded and has different viewpoints is going to be way more beneficial than just going downstairs and watching The Office for the 13th time that day.
Yeah, no, I totally agree. I think this is one of the greatest communities on YouTube. And maybe I can touch on my career a little bit as well. But I just want to congratulate you, man. I mean, you're serving, you're out there, you're hustling, and I think you could be a good inspiration to anybody that's trying to find a path in life. I honestly think if the army is, I think it's helped a lot of people. I know a lot of people that have gone that path, and I'm almost a little bit jealous on the aspect of it too, because it seems to work out pretty well if you find the right niche within that. But for myself personally, yeah, the only reason I have all the time in the world to deal with this is because I lost my job, man. I mean, I was a full-time magician. It's been my bread and butter, and I was joking last night as well, because I mean 2018 was my prime year. 2017, 2018, I was crushing. I mean, we were doing 3-4 shows sometimes a day. It was just dumb, but I was making anywhere from three to 5,000 a month, just crushing back then. But then this happened, and now I can't expect any real work, let alone when you look at the margins of some of the places I work at, like resorts, like restaurants, like businesses. Like, they're going to be more worried about getting their balance sheet up before they're going to be doing parties and hiring entertainment, let alone until we have a cure and people are even comfortable interacting with somebody on stage being a magician. So I got lucky in the aspect of I have time to dedicate to this, and I'm in a situation where I'm not married. I'm still living at home with my parents, taking advantage of that. So I'm trying to put myself back on a path, because this is the first time ever in a long time where I'm like, shit, I'm not making enough cash flow at the end of the month to even be able to afford rent. Whereas before, I'm like, okay, well, I'm living at home, but if when need be, when the time comes, I can afford to move out. Now I'm in the opposite situation where I'm like, shit, I got to start new businesses here. I need to get off the ground. And during that time, I'm going to just segue a little bit, and I'll kind of lead up to what I'm doing now, aside from the stock market aspect of things. Um, I got real lucky, and so did my girlfriend, because we talked about how leading into this pandemic, how stupid lucky the both of us got, because she ended up getting a job that she still has out of just, I don't want to get into the whole story of it, but she's lucky to still have her job because it's only a new job and it's paying her salary. She's doing unbelievably well with side hustles, just crushing it. And then here I am. I went through a big falling out with a business partner last year, and it was rough. It was uncomfortable. It had to do with the entertainment aspect of things on the DJing side of my business, and it was pretty bad. But at the same time, last year I just decided to start doing this YouTube channel, and I didn't have the fullest amount of time to dedicate it to it. But at the same time, I'm like, I'm going to work on this, see where it goes. And then sure enough, I mean, toward the end of last year, I had that big falling out, this pandemic hit, and now I've lost all of this work. But now I have this YouTube channel that started up. Now I have these websites that are cash flowing. And I'm like, and my girlfriend's like, I mean, that couldn't have timed out better. Because if I didn't start any of these other side hustles, I would have nothing. I would be one of those people just sitting on my hands trying to figure out what to do, or, when is my career going to come back? And I'm grateful that I had something to keep my focus, because the worst thing is getting caught in a drought, not knowing what your next move is. So I'm glad I had something to move to. And the stuff that we're highly focused on today is building websites and getting involved in the online business realm. I don't know if I want to go down that path. If you think it's interesting, I mean, I don't know how much you're involved in making online businesses. I don't know if do you want me to go down that path briefly?
Yeah,
I
and
can.
just a quick note on that. I think, like we talked about previously, where getting into the market and not experiencing immediate success in the financial side of it, I think can be beneficial in the long run. There's so many stories of people. Very rarely do people jump into something and automatically have success, and they're just off to the races. And I
Yeah.
think a lot of like the super hardcore success stories come from similar situations where it's like, I had this thing going for me and then I lost it. And it was like, okay, what am I going to do now? And I think that could be,
Yeah.
the gas added to the fire, where it's like, I don't have a choice. Like I have to make moves in a different direction. So yeah, I'd love to hear. I know I'm kind of on the outside looking in, but in terms of like the website stuff and online business, what are you actually trying to do there? If you can get into specifics.
Yeah, so essentially, if I'm gonna get into some pretty tough topics that people might not be aware of some of the terms, so I'll try and keep it simple nonetheless. But at the end of the day, there's everything is heading online. I mean, there's a reason Facebook, Google, Amazon are worth $1 trillion, and people keep forgetting that that's where everything's going is online. People are selling everything through Amazon. They're selling everything through Facebook ads, and people keep forgetting. Well, what people don't realize is that online businesses trade exactly the same way real estate trades, and essentially what you're doing in the most basic fundamental terms is you're basically like a sales rep. You're going to go out, you're going to find a product. Now, you don't, in my opinion, you don't want to own the product. You don't want to drop ship the product. You don't want to be one of those Amazon people that, finds the supplier, sets it up with Amazon, and then, drop ships it to whoever orders it. That's ridiculous. But I'm sure people have heard of things like affiliate marketing, where you sign up to be an affiliate for a product, which on Amazon, you can be an affiliate to everything on the website, and they'll pay you 10% to promote it. Let's say you have a Facebook page, 1,000 friends, and your 1,000 friends love hearing about how you paint your nails, and they kind of take advice from your nail painting ideas and like how you're doing it. So then you promote an affiliate, you sign up to Amazon, you find your favorite nail polish, and you promote it to your audience, and then they buy it. I mean, at the end of the day, that's the fundamental truth behind this, is you're just being a sales rep. But the difference is a sales rep today isn't like a car dealership sales rep where you have to wait for people to come in and you have to find those people. I mean, it's a lot more of a challenge. You need a brick and mortar store. You got to have all the cars. Today, you don't need anything. You can sit at home and you can create funnels using these social media sources. Like with Google, I mean, you can do what's called search engine optimization with blogs, and you can rank blog posts, and then thousands of people can flood in and see those blog posts. And if those blog posts are about a specific product like coffee, like hats or socks or clothing lines, and you're just reviewing these products and they're reading your blog and they like it, and then let's say you sign up to an affiliate based around those products you're reviewing, and then you're helping solve that problem because those people are finding a solution through you. And the thing that's so beautiful about this is the cash flow, because you can start these businesses with almost zero down, except you're going to have to pay a little bit. Obviously, I'm using a phone and a laptop and paying for a monthly subscription to the website service. But at the end of the day, if you can cash flow even $1,000 a month off an online business, these things trade anywhere from 30 to 40 times their monthly earnings, which is pretty crazy, because that means if you're getting, say, 1,000 a month, I mean, at the end of the day, that business could be worth 30 grand on the public market. And if people want to kind of, and I don't want to get people rushed into buying these businesses, because we're trying to buy them as well. And they're very passive. Not all of them are passive, but a lot of them, once they're set up and running, like my YouTube channel, let's use my YouTube as an example. I mean, I only have three or 4,000 subscribers, but at the end of the day, there's three kind of videos you're going to make. There's a kind of video you're going to post that just your subscribers are really going to watch it. They might not like it. They might find it interesting. It'll be a dull video that'll burn out. The second video is your viral video. It's a video that goes super viral really fast and then dies. And then the best kind of video you can post is the video that ranks under a topic. Now, these kind of videos for me would be talking about, say, Facebook stock, Nikola stock. When I make those specific videos, if you go on YouTube right now and look up Nikola stock, my video will come up in the top 3 searched. So I've ranked under that topic. Now, people that are looking up that topic are going to find that video. They're likely to click on it, and I'm going to get ad revenue in perpetuity for as long as that video is ranked, therefore becoming passive income. And this is kind of how the online business realm works as well. You're trying to steal traffic sources, and all the value in these businesses is in that traffic source and the stability of the product you're selling. And like I said, I sat here, and in 6 months, me and Matt built these 2 online businesses that are cash flowing almost $2,000 a month. And so long as we can sustain that over a 6-month period, the valuation in the niche we're in will be likely to be around 40 times the monthly earnings, which means the business we have today, I could almost guarantee I could flip it within a week for $50,000 to $60,000. And people don't realize how crazy easy it's not. I'm not going to say that the task of it's easy. It's very time consuming up front, because passive income is usually active before it becomes passive. You kind of got to build the mode. It's like buying, real estate, rental apartments. Like, you're going to have to put the time in, fix the place up, get it approved, buy it, do the deal, get it all there, find the tenants. I mean, it is a challenge, but at the end of the day, if you put the time in, it can be very fruitful in a very quick amount of time. And I know people that buy and trade these businesses. They'll buy an online business, they'll understand the product, they understand Facebook ads. So they'll spend 50 grand on a business that's cash flowing, say 1,500 a month. They'll go on Facebook, they'll run Facebook ads, drive the sales up, and then flip it a month later for 70 or 80 grand. I mean, there's a lot of different ways to approach it, and it is a challenging niche because people don't understand how Google works. They haven't been in the game of trying to rank topics. But at the end of the day, it's where the world is headed. And just like you, I think making these podcasts and kind of connecting with an audience and building kind of that traffic, I think that's hedging yourself toward the future. And I think too many people aren't hedging themselves for what the future is going to be, which is all going to be online.
Yep.
I mean, at the end of the day, every single service is going online, whether it's grocery shopping. You can name almost anything people do today. I mean, they're doing it online. Uber. That's why Uber got rich. It was an online, simple, click a button service. I don't have to hail down a taxi. It's not sketchy or confusing. I know what I'm paying up front. I mean, they solved the big problem there. But at the end of the day, if you can take anything online, the value automatically becomes tenfold.
Yeah.
And we're in the early stages. I think if you could have caught this trend 5 years ago, you would have been better off. But even still today, it's a huge capability to tap into it, because I'm probably explaining this, and most of anybody listening to this probably isn't running an online business. They're probably brand new to this world. And I think it's important for them to recognize the value that still exists here. Because like I said, you can go put, I haven't said, but you can put $100,000. You can spend the next 5 years building up $100,000 in your stock portfolio to make $400 or $500 a month in dividends. I mean, that takes a lot of time. Dividends, I mean, the return on stocks isn't that great, if I'm being honest. You need millions of dollars to retire comfortably or luxuriously off a stock portfolio, but you can start a business. And the statistics behind becoming rich off businesses, I love doing the lottery statistics, because 1 in 1,200 people can become a millionaire off starting a business. 1 in 400 million people become lottery winners globally, right? So, I mean, at the end of the day, like, if you could just sit down and put your time towards something that has that future potential outcome, I mean, it's so much more valuable than, maybe just necessarily 100% stock focus. And me and Matt, I proved this to Matt, because Matt, he's got a $500,000 portfolio, highly focused on stocks. And within the first 6 months, the cash flow that I built up for ourselves and for him and what he's getting is already almost the equivalent of what he's getting off of his dividends. And I mean, that happened in 6 months. So it's kind of staggering when you look at how fast that time frame can happen. But again, it's not easy. It took us 6 months to get to this point, and when we started, we weren't cash flowing more than $50 or $100 a month. So, I mean, the hardest thing is stomaching it and actually knowing kind of the direction you're going in and understanding the time frame behind it. Because with my YouTube channel, too, as an example, I mean, when I started it, I didn't plan on making money for the first year and 6 months. And I went into it knowing that, because everyone said, like, you're not going to make money in the beginning. So I said, look, if I don't get to my goal in the first year and 6 months was my initial goal, I'm going to try and post a video once a day, 5 days a week. I'm going to do this for the next year and 6 months. That was my goal. And now I'm there. It's been a year and 6 months, and my online or my YouTube cash flows, I'm hoping the check this month should be around $400 to $500.
Nice.
So I'm almost at my goal. My end goal was to get to $500 a month. But I mean, if you cash in meeting Matt, because I wouldn't have met Matt if it wasn't for the YouTube channel, and I wouldn't have started the online businesses I did if I didn't meet Matt. And just like you're saying, like, making that connection on YouTube has huge value as well. So, I mean, you don't even have to just look at it as, oh, well, what if the business fails? Well, if you make connections out of it, I mean, those connections can have tenfold the value too, right?
Right.
Because I mean, because I would have never met Matt if it wasn't for this YouTube channel, and we wouldn't be doing what we're doing right now. So I think that's another important thing to recognize is, like, even in your case, you don't have to be 5 days a week killing yourself doing this. I think you could just do it once a week. And I know we had Dave on the stream last night from Hidden Freedom Investing, and he said the same thing. Like I don't have the drive or, near the energy to jump just crazy into this stuff. So I'm only going to be posting a video once a week, but he's still hedging himself, and his YouTube channel is growing nicely because of that. And like he said, when he gets into retirement because of his full-time job, because he plans on retiring in the next 2 years, I mean, now he has these side hustles that he's created over the last year or two. He's made all these connections with people like myself, Matt, and God knows who else in the community. And I mean, that could sprout into God knows what. But I think it's important for people, if they get into the stock market world, take those fundamental tools, because I noticed that people are either 100% stocks or 100% real estate or 100% online businesses, and they don't diversify. And I think it's important to kind of to realize all these different tools and educate yourself in a manner to, get comfortable enough to capitalize on those tools when you understand the appropriate time to utilize them. Because I love the real estate battle, because for some reason real estate people hate stocks, but the same tools that go into learning how to do real estate are the same tools that go into understanding a business on the stock exchange and going through the balance sheet and understanding if the cash flows are sustainable. It's all the same stuff. And it's the same thing with online businesses. They're just tweaked a little differently, and you have to have a little bit more of a hedge on certain aspects of those businesses. But at the end of the day, it's all the same. So I love expanding into to all those realms. But sorry, I hope that made sense. I don't want to rant on too much longer because it's a pretty broad topic. I don't know if you have anything you want to localize on there and we can expand.
Yeah, if you could just break down, because I don't have experience at all with the affiliate stuff and with you know, getting your hand in, like you said, let's say there's a nail polish company or a nail polish page, right? So if you could break down on that example, are you buying basically that website and then somebody else is still running what they need to do and you're collecting the passive income from that? I'm kind of confused on what's actually going down in the actual process there.
Okay, so we're right now starting businesses and we're in the process of trying to buy them. Finding the right business to buy is hard. There's hundreds of them and a lot of them are trash in my opinion. I mean, there's a lot of fundamental analysis that goes in for me when I'm trying to find one to buy, because obviously there's a lot of risk when you start talking about throwing $5, $10, $50,000 into something. But at the end of the day, no, you can partner with people if you want to finance a business, but at the end of the day, you're trying to buy them outright. These people that are selling these businesses just want to get rid of them. And that could be for all kinds of reasons, just like somebody wants to get rid of a rental property. I mean, it's the same sort of deal. There's tons of reasons. You want to know why they're getting rid of it, and you want to have a hedge on your information so you don't screw anything up. But at the end of the day, let me give you an example of a business I was trying to buy last week that failed because of the way the auction site was run, which really pissed me off because it was more or less, I think, the auction site's fault than it was mine. But this was a CBD product. Now, I don't care what the niche is. I like the stock market niche because it's a very vast hole, and the rate of return on affiliates is much higher because, I mean, credit card companies and banks, and you're advertising to people like yourself that have money, that have savings. I mean, it's a much more profitable niche than trying to sell something like, I don't know, something that's not popular, like say Q-tips. Like, I mean, that market is going to be a tough challenge to break into. And there's probably, I don't know, there's probably a lot of people competing there too. But at the end of the day, the one product that I was trying to buy into was a CBD product. And the way this website was a blog site, it was 100% blogs. This guy wrote a blog post about everything to do with CBD, the history of CBD, why is CBD so expensive? And I mean, it's a growing product niche. Like, I mean, everybody knows the MJ sector is exploding. A lot of people are getting into CBD to relieve cramps. They're doing it for pets even. And there's a lot of affiliates. And if you look up CBD affiliate on, say, Google, just literally Google CBD affiliate, and you'll find every affiliate or every CBD product that's willing to partner with people that want to sell that product. And so, I mean, it's a very spread out in that aspect, which is something I really liked. I'm like, okay, so if we want, we can expand into a bunch of other, we're not stuck to one affiliate, because if you're stuck to one affiliate and that affiliate falls out, well, there goes all your cash flow, right? So what this guy had was a blog site about everything to do with CBD, and he was generating about 10,000 views a month without any other work, because he wrote something like 40 blog posts.
No product,
no
40, anything like that, just strictly information.
No, nothing. He's paying $10 a month for a WordPress site, and he spent 6 months writing blog posts that got ranked on Google under those topics, and now he's generating about 10,000 viewers a month. And all he did was he went and signed up to an affiliate, and I'm sure you see this with your favorite YouTubers with NordVPN. I mean, I could be a NordVPN affiliate. Anybody can. You can do the same with Casper mattresses. I mean, the product affiliate aspect thing is endless, right? But he was targeting that niche. And I mean, if somebody's looking up the price of CBD and why it's so expensive, there's a high chance that they're looking to buy CBD products. So he found a really good affiliate, and all he did was put a little sidebar that had the CBD affiliate promotion link, and that was it. That's all it took him. It takes 5 seconds to throw that up on the website. And that link that he had up there was making him $400 a month on average. through the conversion, because he was getting on average about 8 to 10 sales a month off 10,000 viewers coming into that site. And he wasn't doing any more work, and it was a trash website. I mean, there was so much room to scale on it. So for somebody like me, it's nice if it's a growing niche. The affiliate link, it has a higher percentage of return, because like trying to sell Q-tips for $5 a pop is trash. Like if I make 10% on that, I mean, what? I'm making 50 cents. If a CBD product sells for $50 or $100 and I'm making 30% of that sale, well, now I'm making, $30 a commission. Now we're talking about way better numbers here. So, I mean, at the end of the day, that was a very simple website, and it was beautifully done in a growing niche with a lot of ways to grow the business, because we could start talking about doing blog posts on, oh, why do people use CBD for pets? And now we can go affiliate with the pet CBD producers and see if we can scale up the sales. That's one approach. Now, another approach is you could just do Google AdSense. I mean, if you don't want to do the affiliate route, which I think has a higher rate of return, I mean, you could just do straight up sign up to Google AdSense. If you're generating 10,000 views a month on your blog post, you can literally just sign up to Google AdSense and now make passive income just like I do on YouTube. It's a very similar path. And I know it's simple and very complicated at the same time. And that's why I always say it's kind of paralysis of the analysis, because just like stocks, I mean, it's a very broad topic and there are hundreds of different ways of approaching it. And it's very hard to find a focus and just work on what you think is going to provide the most value. But at the end of the day, those are the kind of websites we look for. And I'm only telling you this because the deal didn't fall through. And I'm not going to get into the whole story behind why we didn't end up closing that deal, which really pissed me off. But if I can recommend going to one place to look for online businesses, and I don't recommend buying them without starting them. Just like real estate, like if you're getting into the triplex or duplex thing, like you want to fix it up. You want to have your hands in the deal, because you need to know the mistakes. You need to learn from that. And if you can start by paying $10 a month for a website, I mean, if you screw that up, no biggie, $10 a month. It's going to cost you $120 a year for a mess up. Whoop-de-doo. But if you go spend 50 grand on a business and you F that up, I mean, that's going to be killer. So if I can recommend, if you want to learn more about online businesses, I mean, we offer some resources at the passiveincomeeducator.com. If you want to see the auction sites I use, you can go to empireflippers.com. That's the highly most recommended one I would say to use, because those are pristine businesses and they vet them. And those businesses they vet, they guarantee the income for the first 3 months within 30% range of whatever they say the monthly income is. They're the most professional in this game. And if you want to go on the garbage side, you can go to flippa.com. Flippa is, I don't recommend because it's sketchier. It's like lower end businesses that aren't established as well. And it's a bit of a different auction site. But yeah, at the end of the day, man, that's kind of where my focus is right now. My primary focus is online businesses, because I have nowhere else to do my job. So that's where my attention is going, and pretty much stock market investing. And off those two businesses, between building the stock portfolio and the websites, I'm able to cash flow. I think my cash flow last month, that I would like to call money I can make anywhere in the world, no matter it's non-localized, more than half of it is passive, is about $1,500 a month. Because we're going to be getting, I think it's a little more than that, but we're getting about $500 a month off the stock portfolio. We're getting another $500 a month, or $400 or $500 a month off the YouTube channel. And then we're generating about $1,000 a month from the websites is my cut. So yeah, realistically, I'm bringing in about $1,500 to $2,000 a month, literally sitting at home. So, I mean, I could go to Florida right now and, just keep, it is possible. I mean, that's the point of my YouTube channel, is I'm trying to prove to people from scratch that you can build passive income. This isn't some bullshit. This is free. I mean, I'm not charging anybody for this advice. I mean, I'm just saying, look, I've done it. I can show you the facts. I can show you the data points. I mean, I got the analytics. I got the proof. So don't tell me like you can't do this either. And if I can inspire you to go down this path, I mean, let's build the community. I mean, Pat, it's all about, feeding off each other. And I think it was great that you pointed on this, that this is one of the greatest communities I've ever seen on YouTube. Because in the early days when I used to run my magic YouTube channel, everybody's a critic. When you're a performer on stage, everybody's a critic. But when you're playing in the stock market realm, people don't know what they're doing and they just want advice. So when people would even criticize me, I would straight up just email them or send them a comment on YouTube if there was a comment of them grilling me. And then all of a sudden they'd be my friend. And they do a complete 180 and they'd be your best friend because they're like, oh, no way, you applied. He's like, no, I get that. And I get this and that. And they're actually like willing to have a conversation. Whereas on the entertainment with the magic side of things, people were like, no, that's fake. Like, that's dumb. And like, you couldn't have a conversation with them. So I just want to say thanks so much, for bringing me on this podcast. Cause I love, hopefully, like, it'll be nice to see your growth and to see how things go with you. And then we can reconnect, maybe a 6 months from now or a few months, and, hopefully continue to grow the community. Cause I can't say thanks enough for giving me the opportunity as well. It's a beautiful thing. And I think people should, recognize that and realize there's people like us out here to help you. If you're new to this, like, we want to help you, and we're not those guys that are going to charge you $100 course, $1,000 course like Ty Lopez is. I mean, anybody can do this with the information that's available out there, and we're here to help. I mean, that's what we're trying to do, right?
Yeah, it's awesome. And I've told everyone that's come on here, my goal is hopefully for this is probably very one-sided in terms of who's benefiting the most out of this in terms of their channel, but my goal is for this to be more mutually beneficial down the road. So bringing
Yeah.
bringing guys back on, kind of update and seeing how they've progressed since the last time they were on the podcast. And what I am very excited for is, I mean, in the grand scheme, dude, you like, from what I understand, $2,000 passive income, internet business, all that kind of stuff. This is like just the beginning for that stuff. So the future, I mean, it's not like you've been grinding at that game for 10 years and you've just gotten to the point where you are now. So
Yeah.
the trajectory, I think, will be awesome, and it'll be good to see. Yeah.
And it could fail. It could fail. I'm not saying none of this could fail. I mean, I started my YouTube channel to document my passive income journey. And when I started my YouTube channel, I was only making $300 a month in dividends at the time. So, I mean, back then, it's crazy to see how fast it's grown in just a year and 6 months. But there's nothing saying it can't fail. Like, life's not fair. Unfortunately, I could hurt myself. You never know what's going to come out of the woodwork. So, I mean, that's why I'm so passive and saving as much as I can, because I don't know what's around the corner. I didn't even see this coming. Nobody did. So I'm glad that's why I save. But at the end of the day, I mean, you guys can watch my failures too. I'm here to give you guys a learning lesson. So it's great right now, but if there's nothing saying it, one of my companies goes bankrupt or something, you never know.
Right.
So if you guys want to come and enjoy the journey as well, I mean, I'll shut up my YouTube channel as a passive income educator, or not passive income educator. That's our live stream channel. My personal YouTube is the passive income investor. If people want to check that out as well. And I'll have to maybe send some people this podcast. So you have to share me the link, and I'll shout it out on my next video.
That'd be great.
For sure, and try and get. But yeah, I don't know if you want to keep going. You got anything to finish up? Final comments?
Yeah, dude. I was just gonna get into it. So something I do like kind of asking, just a quick answer is fine, or if you want to go on about different things you're into. But on the non-financial side, in terms of whether it be personal development, podcasts you like listening to, books you're reading, anything that you do to just kind of make yourself a better person that doesn't necessarily revolve around the money.
To make myself a better person on the aspect of things, I try and I think I've changed a lot over the last little while, because back in the day I was probably a lot more cockier about my business than I am now, for sure. I've kind of humbled a lot watching big people fail. But at the end of the day, I mean, just realize the connection that you have. I think one of the biggest things that's changed me fundamentally, if we're trying to put the money stuff aside, is actually just opening my ears up and listening to as many people as humanly possible. Because I didn't realize the value you get out of reaching out to people. And it's crazy that you can reach out to billionaires. I mean, like I said, I used to call Kevin O'Leary, and I can't believe I got a hold of the guy. And same with like Ben Malla is a big real estate guy, right? And people just call in and ask. And I think if you step back 20 years, your dad had to be one connected guy to be listening to a Warren Buffett meeting. And now everybody can tune into that. And I think listening to those big investors, because I grew up listening to people like Carl Icahn, Bill Ackman, Mark Cuban, Kevin O'Leary, a lot of the people from the Shark Tank. I like Barbara. I like listening to the real estate people. Robert Herjavec. I mean, I absorbed as much as I could. And on the personal development aspect of things, I'm just trying to keep my health there. My dad was asking me last week too when I was going to burn out from this, because I've been just hammering it so hard. But my girlfriend humbles me a lot. I think at the end of the day, it's a pretty broad discussion, because personal development is something that happens over a long period of time, and it's kind of hard to pinpoint what the moral fortitude comes from. But I think at the end of the day, my girlfriend keeps me morally on set. I mean, she tends to analyze a lot of the stuff that I do and talk about, and I think she's probably one of the most humbled people I've ever met, if I'm being honest, because I mean, she's been donating to a lot of causes during these rough times. She's definitely on the more heart into the issues society faces, whereas sometimes I might overlook those issues because, I'm trying to get to a goal and I kind of block a lot of things out to get to those goals. Because I sometimes I like to try and go out of my way to help people, because I mean, you don't want to always be beating upwards. It's nice to try and meet people like yourself that might be up and coming, because I don't know where you're going to go. So why would I scoff you off because you might not have as many followers? Like, if you have the intellect and the passion and you're doing things right, like, I mean, to miss out on that opportunity because you're ignorantly thinking, oh, well, because I have more money, because I have more followers, like, I'm not going to waste my time. Now, I'm lucky. I did stumble on that you're a good YouTuber. And I mean, I probably wouldn't have wasted my time if Matt Money didn't give you kind of a good thumbs up, because I don't want to stumble into somebody that doesn't exactly have a good path to follow, or they're just using me. Like, I don't want to get used either. But at the end of the day, I mean, it's that moral fortitude just comes from experience and listening to people that have made the mistakes. And if I can recommend listening, just listen to everybody and go out. I mean, you got to take a break. I have a really good wall built up between me and my investments, because I don't look at them emotionally at all anymore. Like I said, I get more excited when they go down than when they go up. Whereas most people, like, it's hard to program your brain in that aspect. So, I mean, if you can start looking at your portfolio as just a completely logical strategy and just get away from it so you can still enjoy your life, and not let it consume you either. Because a lot of people, like, I'm fairly consumed, but I realize it's so weird to me how easy it is for me to block out noise, block out bullshit, block out all the news that might be, counterdictive to what you're doing, because that stresses you out. It's a big stress, right? And I mean, that morally destroys people. And then it makes them make dumb decisions, bad investments. So, I mean, just take things slowly, cautiously. If you're young like I am, like, you don't have to rush into this market. You can just listen to people like myself, like you, cost average in over time, and just kind of grow your moral fortitude toward it, and hopefully be a humbled person as well. Because I'm sure we've all met rich assholes. I met disgusting rich people in my business, especially because I work for a lot of rich people. I mean, entertainment at the end of the day, poor people can't afford a magician that's going to charge you, $300, $500, $1,000 for a show. So I've worked at some pretty high-end places, and I think another really big humbling experience for me was I worked at a high-end steakhouse. Ironically, at this steakhouse, I got to perform for the Hells Angels, which was really weird. But in this steakhouse, I'll never forget these guys I used to entertain, because they would tip me $50 a night to entertain them. But I've never understood the definition of a rich pig until I met these guys. And I always told myself, I'm like, I never want to be like these people, like, constantly hitting on the waitresses. Like, they know they're rich. They're the kind of people that always have their nose up to society. And like I said, I never ran into that before. And it definitely humbled me, because I cringed, and I loved entertaining them, and I pretended to be their friend because they were paying me. But in the back of my mind, though, I'm like, this is not the direction, like, I ever want to go down. I don't want to be the Wolf of Wall Street. And I hate that guy so much. I hate the fact that, like, people admire him. And I love the fact that Grant Cardone was just, like, really, I don't know if you caught the Grant Cardone and the Wolf of Wall Street drama. But I absolutely hate the guy, because that guy is one of the exact exemplifiers of why people hate Wall Street. And I think you want to make sure you recognize that you're not going down the path of, I'm doing this just to get rich, and I'll do whatever it takes, even if I have to screw people along the way. So I mean, I'm going to try and hopefully people like you and keeping in this community will keep me from being snobby or keeping snubbed. And my girlfriend does a good job at keeping me humbled as well, so I appreciate her a lot too.
Awesome.
But this has been awesome, man.
Yeah.
This
Again,
has been great.
I'm super grateful that you took the time to come on here in the morning. And one more time, to shout out where people can find you, and we'll sign off.
Yeah, for sure. If you guys want to check out the websites we're running as well, you don't have to buy our products. I'm not saying you have to go down that path, but if you want to see the cash flow of the websites we're using, is thechartmaster.com, which is just a portfolio tracker. We run kind of a more personally engaged website called thepassiveincomeeducator.com. Those are the two primary sites. And then if you want to watch myself, I recommend going to my YouTube channel, Passive Income Investor. You can find that just by searching it on YouTube. I post videos almost daily, except for Saturdays. I take Saturdays off, but I typically post 6 days a week right now. But other than that, yeah, feel free to come on over, and everyone can have a good time with that too. And but I appreciate it, man. I'm really interested in the podcast side of things. Me and Matt have talked about it, but we haven't had the motivation for it yet. So it'll be neat to see how you're kind of putting all of this together. But I just want to say thanks again, man, for the opportunity. It's been great.